Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, the 11th of May, 2026, and stop me if you've heard this one before, but the optimism around a US-Iran peace deal heading into the weekend is falling apart heading into a new trading week. Of course, oil's on the rise. In today's video, I'll break down everything that you need to know ahead of today's US session, including a look ahead to tomorrow's highly anticipated US CPI report. Let's get into it. So over the weekend, Iran responded to the US peace proposal with a peace proposal of its own. Say that 5 times fast. That counter offer was deemed totally unacceptable by President Trump, and we're sort of back where we've been for what feels like months, and certainly for the last couple of weeks, with that fragile ceasefire in place. The Strait of Hormuz remains closed, and markets are mostly just whistling past the graveyard, if you will. U.S. indices and the U.S. dollar are relatively flat. Gold's falling slightly, and then, of course, the market we're all focused on, oil, is trading higher as we head into a new trading week. More headlines to come from the US and Iran undoubtedly throughout the week. But what might be more significant on a longer term basis are some big trips from US policymakers. President Trump in the latter half of this week will head to China for the first time that a US president has visited that country in about 8 or 9 years. He'll be meeting with President Xi. I wouldn't expect too much in the way of headlines, though of course both sides will say that progress was made. What might be more interesting for traders is that Treasury Secretary Bessent will be visiting Japan. Of course, Japanese authorities have been intervening to try to strengthen the yen, something that might play into the US's goals as well. So any sort of joint statement there talking about the currency market could have big implications for those of you trading the yen. Keep an eye on that. Looking ahead, tomorrow will bring the US CPI report, which is expected to rise very sharply here on a headline basis, 0.6% month over month. That would bring the year over year rate to 3.3%. However, a lot of this inflation is in things like energy and food prices, at least for now. The core CPI reading filters those out, viewing them as temporary aberrations to the underlying price pressures. That reading of the core CPI is expected to come in lower at 0.4% month over month, 2.7% year over year. As for that US CPI report, one of the best leading indicators are the price components of the ISM surveys. Here I've plotted those two against one another. The ISM price components, just taking an average of the non-manufacturing and manufacturing readings, have skyrocketed in recent months above 70 now, approaching 80. That is something that suggests that we could have a hot reading in CPI here on the blue line, though of course there's no guarantee from just a one variable model that this gap will necessarily close in 1 month, but it does tell us that there's a lot of upside pressure heading into this US CPI report. Today's chart of the day is the US dollar versus the Canadian dollar. Here on a 4-hour chart, you can see it's broken out of a bearish channel that characterized most of the month of April. Now we're trading in a relatively tight range between resistance at the 38.2% Fibonacci retracement near 137.10, maybe up to 137.15, with near-term support, at least over the last 24 to 36 trading hours, coming in closer to 136.65. That's the range to watch here. And do remember that we got a Canadian jobs report on Friday as well. That Canadian jobs report was worse than expected and contributed to the upside momentum. Perhaps a strong US CPI report could get the US side of this currency pair into gear and could have us testing the top of that range. If we do break above 37.15, the next level to watch will be closer to 137.50. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one quick favor before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.